Hey, Steve Saretsky here. As always, it's Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. For those of you that missed it, I did an interview with Jeff Booth the other day. Jeff was the author of the book called The Price of Tomorrow. And I initially stumbled upon Jeff's work on Real Vision, doing an interview there where Jeff has a background starting multiple tech startup companies and successfully selling them off. So a background basically in the tech space, and his kind of viewpoint when he went on to Real Vision, and now he's been on all these podcasts, he's advising certain financial institutions as well, is basically that he's arguing that technology is evolving at such a rapid pace that it is in fact deflationary. Everything that technology is designed to do is to basically lower the costs for the end consumer. It's to make things more efficient and, by thus creating economies of scale, etc. Could talk about self-driving cars, your smartphone, for example. This is all basically deflationary. And what you have is central banks creating a 2% inflation targeted mandate. So central banks are desperately trying to hit this 2% target, which, at least by their metrics, have consistently missed that 2% target over the past 10 years, and is basically their reasoning for keeping interest rates at zero for the next few years at a minimum, and engaging in all this quantitative easing is because they're saying we need to do this to basically restart the economy, to provide liquidity. In that way, we will be able to hopefully hit our 2% inflation target. So, long story short, is the deflationary picture is the central banker's worst nightmare, because it makes it more difficult to repay debt. Obviously, in a devaluing currency, it makes the real cost of paying back the debt starts to increase. So when you have inflation, you're paying back that debt in cheaper dollars down the road. But what Jeff argues is essentially that technology is so deflationary that the central banks are caught in this old system that is not adaptive to the modern society. That is, central banks will not be able to keep up with the pace of technological advancement, which will then continue to spur deflation. So what they're going to continue to do, thus, is continue to do more quantitative easing, and that is ultimately creating societal problems, because you're explicitly trying to devalue the currency, and basically what you're doing is you're pushing up asset prices. And so you're creating, now we're talking about the social frictions, which basically is everything that I've talked about in this channel. I agree with wholeheartedly, which kind of brings me to the next point. Is, speaking of this week, we had the Bank of England come out and join the long list of central banks that is basically the Bank of England saying that they're now further investigating basically the process of going into negative interest rates. They're probably going to go down that rabbit hole. Of course, they join the European Central Bank, the Bank of Japan, the Bank of New Zealand, the Bank of Australia has talked about negative interest rates, the Swiss National Bank. So the list of central banks globally that continue to grow in support and in favor of negative interest rates is growing. And I suspect it won't be long until the US and Canada ultimately follow suit, which again is creating this larger picture of central banks ultimately devaluing the currency, punishing savers. And so far, right now, which kind of leads me to my next point, is essentially that right now anyways, is monetary policy and fiscal policy are winning over basically the real economy. So they're supporting asset classes, asset prices right now, which brings me to my next ultimate point of this video, is looking at the most latest August sales figures across the Canadian housing market landscape. So if we dial back into August, who on their April forecast, when it looked like the world was coming to an end, did anybody in that April forecast have house prices in August that they said, okay, well, May, June, July, August, 4 or 5 months down the road into this global pandemic, as the world is falling apart around us, stock market's crashing, that in 4 or 5 months, the MLS home price index across Canada would be up 9.4% on a year-over-year basis in August. That the average sales price would be up 18.5% on a year-over-year basis. 18.5%. That's actually the exact opposite of what CMHC said. Now remember, CMHC came out in April and said that they were predicting a 9 to 18% decline in the average home price across Canada. So again, fast forward today, 4 or 5 months in, it's actually up 18% on a year-over-year basis. Now again, I'm not going to sit here and say by any stretch of the imagination that there's not going to be any sort of house price correction, but I think this kind of goes to show you that, and this is what Jeff argued in his interview with me, is that home prices should have collapsed by now. Various other asset classes as well. But the fact that they haven't, at least not yet, kind of goes to show you the incredible manipulation that central banks are doing to sort of keep this game going. And obviously now the fiscal side is coming in support of that monetary policy. And so, again, now we look at it and say, okay, well, that's prices. Those could be bound to change. I certainly agree with that. I'm not going to disagree with that. We can certainly look at the mortgage deferral cliff coming down the road, various measures that have been implemented to support the housing market, pent-up demand, etc. Certainly not denying that. We've talked about it ad nauseum on these videos in this channel. But again, it kind of just goes to show you, like, for example, in August, on a national level, home sales for the month of August hit a record high. So again, had you turned back the clock 4 or 5 months, please put it in the comments below. And I would prefer a timestamp if you have it. If you had home prices and home sales, hitting basically record highs 4 or 5 months into a pandemic, please share your wisdom. That was certainly a contrarian call, and again, we'll have to wait and see how the rest of the next 12 months play out. I certainly am in agreement that there are obvious headwinds, but I think right now the obvious headwinds are, clearly everybody knows, a pullback in immigration, which is going to result in a reduction of the population growth. The labor market is continued to be on a recovering basis. That's going to take many, many years to get all those jobs back. In fact, a lot of them probably won't come back in general. So those are and the mortgage deferral cliff, those are the obvious headwinds moving forward into 2021. But as it stands today, these are the official metrics coming out. So that's kind of what I'm keeping my eye on this week. I highly encourage you to check out that interview I did with Jeff Booth. I think it should provide a lot of value and insight to you guys. Again, I mean, Jeff, follow his Twitter stream as well. I think he's got about 180,000 followers on there now. He's really kind of grown his fame over the last couple of years through the promotion of this book and through his various interviews that he's doing. So it was pretty interesting to speak with him because he does share ultimately a lot of my thoughts. So but I hope that video brought you some value, entertainment. Hit thumbs up, subscribe, and we'll see you next week.